Good evening. Thank you all for coming. I'm going to take the liberty of introducing our guest speaker today. I've known Ms. Fisher for 30 years. She went to Bates College, got an MBA at NYU, started her career as a programmer, economist for the Fed, then went to Morgan Stanley. She was a bank analyst at Morgan Stanley, and then found her way to Marine Midland Bank as the head of investor relations, and met her wonderful, good-looking husband. Spent a short career there until we got married, and then joined the JP Morgan, and spent her investment banking career at JP Morgan, and then moved on to AllianceBernstein, where she was the senior portfolio manager, and now the head of wealth management group, and she can explain to you what that means. I have heard her for over 28 years, and for some of those years I've actually listened to her. She is the smartest woman I know. She's the love of my life. She happens to be my wife, even though she doesn't like my name, but that's okay. That's a different story. She's very committed to our community, as I am. She's on the board of Hilding, as many of you know. She's also on the board of the Aloha Foundation in Fairleigh, Vermont, which is an organization well represented here tonight by Nancy, but owns 7 camps which our kids have all gone to and worked at. So without any more, I'd like to introduce you to Kathleen Fisher. Thank you.
I've been introduced many times, never quite like that, so thank you all for being here tonight. I don't take it lightly that you actually had to pay to be here, so I really, I hope this proves to be really thought-provoking, because let's face it, the topic of China is one that I will say no one today knows how this is going to play out. There's far too little good data, there are far too many conflicting things that we see, and of course, lots of censorship, lots of political control. There's lots of things we can't get our arms around. I want to start by saying, how many of you have been to China? I expected that. Clearly, China has become a must-go-to place for educated travelers. And all around the country, I started doing this presentation in the spring, and I was stunned. No matter where I went in America, I would say 80% of the audience had been to China. So clearly, we are all taken by what's happened there. There's never anything like it. I've never been to China, so you may say, how on earth can I be talking to you tonight? Well, as Rocco said, I started out as an economist. But more importantly, I work at a firm that invests for institutional investors and private investors in currencies and commodities and stocks and bonds around the globe, and therefore we have to understand what's happening so that we can invest anywhere in the world. And of course, what's happening in China has a huge effect on everything we're doing. So we have to get our arms around what we know. We have to acknowledge what we don't know. We have to figure out, given what we see and what we can verify from multiple sources, what trends do we think might be sustainable, and what kind of scenarios do we have to think about that could create change either for the good or for the bad. I also want to start by saying, many of you who have been to China understand that we can't look at it through our Western lens and think we understand it, right? We always have to say they do not come from a Judeo-Christian background. And therefore, things that we think are so obvious and so logical and so part of human culture are very, very different. And we have to take that at face value without imposing our expectations of how things play out. So I'm going to go through some things that you know, and then I'm going to try to put some numbers around some of this, because I work in a world where it's all about numbers, and try to maybe draw some possible conclusions from some of this. And as I said, we don't know where things are going, but we think we can think about the issues that we should be watching, because they may give us some sense of whether the direction China's going in may be better or worse for the global economy. So let's start, Gloria, with the very first slide. First, I want to apologize. Gloria's going to click the slides, which is a new thing for me, so if you mess up on the slides, have patience. Lots of people are worried. Mass market, everybody's worried about what happens to China now. Now, that is interesting, because if you go to the next slide, Gloria, you'll remember it was only a very few years ago that the opposite concern was all over the place, right? Everyone was concerned that China was going to rule the world. And I got questions all the time from people saying, China owns X% of US debt. What if they start buying US treasuries? That was all over the press, that China owned us. And so the concerns have flipped very quickly because there clearly has been a sign of slowing growth in China. So to start with how rapid the growth has been, let's go to the next slide, which shows that from 1980 to 2012, China did grow at a compound rate of 10%, which was extraordinary. The next closest country to grow at that rate was little Bhutan, which obviously doesn't count. And my point is, no other countries that were large were growing anywhere near this amount. You can see that China was growing at about 3 times the rate of the US over this 30-year period. This was extraordinary. And for much of the period, no one was paying attention, right? This started in 1978. And it really wasn't until after the tech bubble crashed that everybody really saw the impact of China. If you look at the next slide, this is a reminder that this is what China kind of looked like in 1978. That was right after Mao had died, and Deng Xiaoping came over and said, let's talk about reforms. And they did indeed start to have some financial liberalization that did lead to a dramatic pickup in growth across China. And the way growth is implemented in China is sort of the central government sort of tells the municipalities what to do, and they're incented to do it. And the financial incentives are good, and people act very quickly, and therefore things can happen quickly in China, and indeed they have. Now, even back then, China had some pockets of wealth. If you go to the next slide, Gloria, you can see that Shanghai was always much better off. Remember, Shanghai was a Western city for a long, long time. And there we go. In 1990, Shanghai, even though the rest of the country was rather poor, did look like a very prosperous city, but maybe a city around 1950s vintage, right? But look at the next slide at what Shanghai looks like today. And those of you who have been there know that it is quite startling. It's remarkable how fast this happened. Now, I'm sure you've all read enough to know you worry about how shoddy some of the construction might be, but at least it looks good. And it is truly a Western city. And actually, by any statistical measure, it is a developed city in terms of the per capita income and that sort of thing. And as you know, next slide, all this came about because of the extraordinary growth in exports in China, which did indeed bring 600 million people out of poverty over this time frame. And that is the positive, certainly, that's happened from all of this. But there's still today 100 million who are living on about $1 a day. And if you go to the next slide, this picture I showed you a minute ago actually was taken in 2011. So China has this amazing contrast of these space-age cities and desperate poverty, and oftentimes cheek by jowl, right? It's still in a very odd place. So while all this transformation has been happening, the impact on the world has been felt first in commodities. On the next slide. In 1980, China had a marginal share of these items. But if you go now, click Gloria, you can see that by 2011, they were making 73% of all the elevators in the world were going to China, right? You can see all that building demand was causing remarkable shifts. And the next section, they were consuming this amount of steel and copper. And this has had some significant ramifications around the globe because companies in the commodities field, when they saw that demand building, of course, cranked up capacity and had boom years in the 2000s. And then when growth slowed, of course, there was some real problems. So right now, you've got countries like Brazil and Australia and Canada that were booming that are now having a much tougher time because as exporters of commodity-linked goods to China, they have seen some tailing off in demand that has hurt their economy because there's too much capacity to meet Chinese demand. In the last section, now that China does have a middle class or many higher-end people, they are now consuming 30% of the cars in the world. They are the largest market for automobiles, and 29% of luxury goods. Now, some of you, like me, remember the 90s were when the Japanese were big consumers of luxury goods. That's over. It's the Chinese. And I'm sure you see when you travel, especially in Asia, all the luxury stores are populated with Chinese speakers because they know that's where the demand is. And having been on the West Coast recently, I was quite stunned to see it's starting to happen more and more in Los Angeles and San Francisco as well. Retailers know who their buyers are, and they are increasingly the wealthy Chinese. So you've got a tale of two cities here. You've got some very wealthy people in China, some remarkable things have happened, still some poverty. So the question is, where does China go from here? And this is what we spend all our time on. So slide. In 1980, China was a poor country. By 2012, they had moved into what the World Bank considers middle income. And that's per capita income of about 10, I think it's around sort of 5 to 10,000. So the question is, click Gloria, where do they go from here? Now, China is not the only country that's moved up from from lower to middle income. Lots of countries have done this over the years, and they tend to do it by having people move from agrarian places into urban areas. They do it by developing infrastructure. They do it by developing productivity, and China has done all those things. So it's very understandable how they moved into the middle income ranks. But the question is, where do they go from here, and how do we figure that out? So on the next slide, in 1980, there were 62 countries that the World Bank had categorized in this middle income category. On the next slide, you can see that by 2012, only 3 of them had moved into the rich category, which is income of about 22,000. There were 50 that stayed where they were, and 9, you can see, actually fell down. Now, what is it that caused those 3 to rise to the top? Let me tell you first that they were Korea, Taiwan, and Oman. Now, Oman is oil, that's clear. But what was it about Korea and Taiwan that let them rise up into that rich category? On the next slide, I will posit that this is probably the most important thing of this whole presentation. It was basically economic freedom. And here we're calling that property rights, rule of law, fair taxation, and equal opportunity. Now remember, Korea was not an iconic country some decades ago. There were dictators, there was some horrible, really bad stuff in Korea. So they managed to pull it off. But this is a big deal, because think about it. And I know you all know a lot about China. Most companies in China are government controlled. They're state-owned enterprises. Most capital goes to those companies. It's very hard for small enterprises to get funding. So when you talk about things like equal opportunity, we're not just talking there about people, we're talking also about companies. When you think about things like rule of law, if you have no intellectual property rights, which China has been very bad about, it minimizes any motivation for innovation, because if you can't get a patent, it can't be enforced, why would you bother, right? So there's a lot of things that are problematic in the way China works today by having the centrally controlled economy, lots of misallocation of resources. There's something that's not explicit here, but the central bank in China tightly controls interest rates in a very, again, favorable way to state enterprises, unfavorable to everyone else. It causes great inefficiencies. And there's also, just as you have seen the many, many pictures, great inefficiencies in terms of where capital is going. There are these empty cities, you've seen pictures of those. There are lots of misallocations when the money is, the direction comes from the central planners to the municipalities, who are told to develop infrastructure, but if they build a large town hall, a temple to themselves, that counts as infrastructure spending, even though it has no purpose, right? So there's amazing inefficiency that you've got to do something about if you're going to have a more diversified, more successful, more self-perpetuating economy. So one of the reasons this is a challenge is that, if you go to the next slide, Gloria, I'm sorry, this picture, I should have said this. This is just, I was saying those dots just tell you what those other countries did. So let's keep going. And China's very poor in those things, okay? So here's the leadership. Former leadership. There's a new guy in town. This is the former leadership. And I want to posit that for all of the differences in Chinese culture, etc., our people on the ground will tell us that these are very smart people. We cannot in any way denigrate what the leadership in China has done over the past several decades. It's been the largest mass movement of people from rural to urban areas in the history of mankind, relatively successfully, relatively peacefully. We'll talk about the problems in a minute, but still, it's been a massive change. And these, the problem, though, is you probably read that there is a clear economic problem developing, and that these guys have been able to amass great fortunes while they're in power. So, click, Gloria. They're now often talked about as princelings. And one fellow here, Wen Jiaobo, who recently stepped down, was found that his family had amassed $2.7 billion of wealth while he was in office, and that's billion with a B. So when we were about Washington, we can remember that things could be worse. But this is a problem about where interests lie, i.e., these politicians have made their money mostly because of having controlled these state-owned enterprises. They can put their family into positions of power in these companies, and they can also, of course, have relationship with the municipalities that they're dealing with. So there's a lot of vested interest in keeping the status quo going, i.e., having these state-owned enterprises continue to do well. The state-owned enterprises also employ most of the people. So if you're worried about employment, which they are, you don't want to rock the boat too much. Having said that, what I don't have a picture of is the new premier, Xi, who has said some things to make it very clear he understands the backlash that has developed against the riches of the ruling class. And as much, he's put a lot of policies in place to limit, to the extent possible, some of the abuses. But right now, talk is cheap. All we know is it's talk. But it shows you they recognize the problems in the perception of the leadership. So let's now talk about the real economic problems that are facing China. And on the next slide, we say the first one is resources. Oil. They're a big oil importer. There probably is oil in China, but it's hard to get to and it'll be expensive. So they have been, unfortunately, aligning themselves with some of the worst dictators in Africa to make sure they have control of some oil there. So they are oil dependent. The biggest issue, the next click, Gloria, is their aging population. The scale on this is actually wrong. So let me tell you that, but the important thing is by 2016, they will start having actual declines in the number of people in the working age population, not just the pace of growth, actual declines. Remember, the one-child family policy has been in place for decades, and so the population itself is stabilizing, but the working age population has been shrinking. By 2030, between 2020 and 2030, they should be down by 65 million people of working age, which is about the size of France, right? And by 2030, the cumulative decline will be about 140 million people. So they are having a real demographic problem coming up ahead. And what that means is that a lot of the policies the government hasn't had in place for the past several decades, which were focused on all this labor coming in from the rural areas to urban areas, is not going to be the driver anymore. They're going to have different policies in place to deal with an aging population and far fewer workers coming in from the agrarian regions. That also means that that what we think of the Chinese engine can't work anymore, because this flow of cheap labor isn't going to be the driver. They're going to have to move up the food chain if they're going to keep growing and building incomes. So on the next slide, we have sort of a simple way of thinking about that. iPads are manufactured in China, but they are designed in the US. Apple designs them here. They outsource to Foxconn, which is a Taiwanese company who does all the manufacturing in China. This is the company you might have read about where the workers were killing themselves by jumping out of windows, and they put nets around so they wouldn't get killed when they jumped out the windows. So unfortunately, that means the Chinese worker is not getting the full economic benefit of the full chain of the product, unlike in Korea, where Samsung designs the Galaxy and assembles it in Korea as well. So the Korean economy benefits from the full value chain, if you would, of that one product. So if China is going to move from being, low end to higher end and truly getting the economic benefits, it's going to have more innovation, more true design development, etc. The things that I said were a problem if you don't have economic freedom and rule of law, right? So that's why those things matter so much if they are indeed to move up the food chain. Now, to put an even starker contrast on the next slide, the reason China has grown so rapidly since 1978 is that government investment in infrastructure and all the things it takes to improve the economy has been quite remarkable. This is looking at investment, the green line, and consumption, the blue line, as a percent of GDP. And you can see that investment has soared since 1979. Consumption has actually ticked down. And how can that be? Well, first of all, the investment is government-sponsored. And frame of reference, investment in the US as a percent of GDP is about 5 to 10%. So you can see how big these numbers are. Consumption has come down because despite the growth in China, there are very few benefits, social benefits, safety net for most workers. So their savings rates have actually gone up. The Chinese consumer is still saving something like 30% of their income, and their incomes have grown, but their savings rates have continued to be quite high. So you look at this picture, and in the US, consumption is about 70% of GDP. Maybe ours could come down a little, but certainly China's could go up. So this is a pretty stark picture, and you could look at it and say, well, it's so stark, they must get it, they must want to do something about it. And they are. They're talking a lot about putting in better benefits, safety nets. Some of you may have read that it's almost so shocking it's hard to believe. Most cities in China have requirements that if you move to a city to get a job, you don't get any of the benefits of being there, like school, health care, and that's one of the reasons people have to save so much. So they're talking about liberalizing that. And they probably can now, because since there's fewer people moving from rural to urban areas, they probably can afford to start doing that. But that's just one of the many things that needs to be done to get people to start spending more. So you can look at this and say, okay, there's, investment has to taper down, and it does. But I want to go to the urbanization issue on the next slide, which is so interesting. There's still a lot of need for investment spending in China. This picture says that if you look at the rural worker share of total employment, China started out very, very high, and you can see those other countries that have developed in the recent decades started higher and became very urban. China is still not that urbanized. So when you see those photos of those empty cities, they may indeed end up being total white elephants and never occupied, but some of them may. It may take some time. There was one story I read recently about a train station that was built about 5 years ago in a place where there was no one there, and people thought it was a white elephant. Next thing you know, there is a city, and it's a bustling, busy, overcrowded train station where they're going to do an addition. So, this is the dilemma. We see these things on TV and we say this is ridiculous. China's lost their mind, but the pace, the number of people living in cities is actually not as big as it looks on the surface, and there's still room to go there. So that's why it's not an easy answer as it might seem on the surface. So now I'm going to try to tie all this together in some numbers, and I won't bore you to death with this stuff, but this is the kind of stuff we do. So on the next picture, when you look at China going back to 1980, we tried to give us a sense of where the growth came from. And the top, if you figure GDP growth comes from labor input, growth of capital, and productivity. And you can see in this row, GDP growth has been around 10% for quite some time. It's remarkable. And labor has already started to peter out a bit, right? Because the population has been aging even as we speak, but the productivity gains have been remarkable. The capital stock has been improving. And at the bottom, in this, the middle row there, it says investment rate. You can see that's that amazing growth of investment by the government. So it's really been spurred by all this investment spending, and a lot of it has led to a more productive workforce. So when we think about what happens from here on the next slide, on this slide, this is our base case view. On the far right, where it says base case scenario, GDP growth, those circled lines, we're saying that we think growth will slow into the 7.5% range, maybe for the next decade, and then maybe 5-ish in the period from 2020 to 2030. And the main reason is that that big change in labor, it goes negative. We think that the investment rate will slow, but and by about 15%, still a lot higher than the U.S., but a lot lower than it's been. So we look for a slowdown that's significant relative to China's history, but still much better growth than we've seen in the U.S. and certainly the rest of the developed world. There are many people, however, who are looking for far worse collapses, and you will hear people talk about true collapse in China. We have a harder time seeing that. Anything is possible. We have a harder time seeing that, and let me tell you why on the next slide. We tried to do some what-ifs, and we said, what if the investment rate, what if the investment rate really slows, and it could. So we got it down to 17% in this decade and 8% in the next, which puts it more in line with the U.S., and we could get GDP growth down to the 3 to 5% range there. So it's possible. Or if you look on the far right, if productivity collapses because the older population is harder to adapt to changes, and there's more services in the economy, you could see productivity declining. But again, given that there's still so many opportunities to improve productivity in China, we find that a little hard to believe as well. So on the next slide, what we're saying is our view is that we do expect growth to be in the 7% range in the next sort of 5 to 10 years. And then after that, 3 to 6 is reasonable. We're closer to the 6% range, but it's possible it could be lower. Our view is that would take a lot of really bad stuff to happen, and it's hard to see that. So we think it's going to be a little bit more moderate. But the real issue, and I hope that I touched upon it, but I think the last bullet is what's so important. What we're all watching is policy. And you get a lot of mixed signals. There's going to be another big meeting in November, one of the big 5-year meetings about the economy. And what is said there will be important. So we're all going to be watching. And we were a little bit more optimistic, I'll tell you. Some of you might have been following this Boji Lai guy who just got sentenced to life imprisonment for lots of stuff that was probably cooked up, but they wanted him out of the way, and his wife was accused of killing a guy, so there's all sorts of nasty stuff. But the reason it's relevant is that the new premier clearly threw his weight on the table on this, and in a way that surprised people. He was taking that really strong central control again. Before that, they'd been saying a lot of things about economic freedom, about helping people spend more money, more consumer safety, and all that sort of thing. So it's going to be very interesting to see what they say, and then what policies we start to see coming out. The one good thing that we're seeing today is on the financial side. I mentioned that interest rates are controlled by the central bank very tightly, and they have been liberalized, and that's important because it may help better allocation of resources. I mentioned that it's hard for small companies to get loans. If the banks have more flexibility, they may be willing to lend more to smaller companies and make money on it. So we think that's a step in the right direction. So there are some positives and some negatives to look at. Now, the subtext of my speech was, China's whatever and America's opportunities. So I wanted to now say, so what if China really does slow. What does this mean for us as Americans? How important is China to our overall economy? So to start that section, I wanted to go back to something that I cannot say is analogous because nothing is analogous to China, but it's a modest frame of reference and one that we all remember, and that is Japan. So on the next slide, remember that in the 1960s, Japan was going through something that was a little bit like China. Very different country, but they were growing at a very rapid pace when, you can see here, the rest of the globe was growing at half that rate. So that was a Japanese miracle back then and really took everyone's attention. And as you know, it totally collapsed in the 1990s. So when it collapsed, and growth was 1% in the 1990s. There was great concern about what it meant for the rest of the world, but you can see that it actually did not have a significant impact. Now, for those in the back who can't see, it's, we've got Japan in the 90s at 1% and the rest of the world at 3-ish. Now, there were other things happening in the 90s. That in 1995, we had the beginning of the tech boom in the US. There's lots of things that had nothing to do with Japan. But to some extent, that's the point. China is big and important, but Japan was big and important back then too, and other things came along that none of us could see. And interestingly, Japan was a much more important trade partner for the US back then than China is for us today. And that's actually on the next slide. You can see that Japan was a much bigger trade partner. China has picked up in the US now, but on the next click, Gloria, we do much more trade with Europe, with Canada, with Mexico, than we do with China, and that's back and forth. Asia is China's biggest trade partner, Europe is after that, the US is third. So it's important to us, but it's not the only thing in our lives. And then when you think about the demographics, this is where, on the next slide, Gloria, we have a relative advantage. As we know, none of us are happy about the aging of America because we all worry about what it means. But relative to the rest of the world, we're still in pretty good shape. And that's partly immigration. It's partly that we still have a higher birth rate than most developed countries. But we are in much better shape than most. And the real importance here on the next click is what it means for the ratio of older people that have to be supported by younger people. We are in pretty good shape compared to the rest of the world. And if you look out, one more click, look out further, you can see how fast China changes, much more so than the US does. And that's one of the big problems that that China's going to have, where the US looks relatively well positioned. Obviously, Europe, as you well know, is already in a pretty bad place. And this is why, we're going to have a very, very different economy in the decades to come as all the developed world deals with these issues. Now, on a totally unrelated topic, but very germane to all this, is energy. You might have been reading a lot about the fact that we are getting close to being energy independent in the US after many years of not being so. And it's because of production of oil and gas both in the US as well as Mexico and Canada. And as I said before, China has nothing near that. They are a major, major importer of oil. And on the next slide, I find this one fascinating, which is patents. Japan actually has more patents than America, but they tend to be more in manufacturing and, I hate to say widgets, but I don't know, that's kind of what I'm getting at. Not as many tech patents as we have. And you can see China is much lower down. China was at about 0 10 years ago. So this is actually a positive that at least there's some sense in China of the value of intellectual property that's starting to build. This is actually a bit of a shining light that at least they're beginning to have that focus on getting patents on things created in China. And then if you think about what would a slowdown in China mean for US companies? 10 years ago, US companies are spending a lot of time highlighting the options they had for growing their business in emerging markets, China in particular. Many put a lot of dollars and people on the ground, and many have changed their views totally. They went in with great naivete, and some of it was highly publicized. A lot of companies would say, you know, I do things and other companies are stealing my ideas and there's no way I can do anything about that. Most, though, just said I thought my American products would just immediately sell, and they didn't. You know, I didn't understand the taste of the consumer. I didn't understand the price points. I didn't understand that one thing about Chinese homes, because they're smaller, people tend to, you know, they don't care about certain things that Americans do, and it's just a very different mindset. So you've seen a lot of companies pulling back. But if you think about the ones that it could affect, let's talk about the industries that would be most affected. Commodities, obviously. If China's not growing, the commodities industry gets hurt quite a bit. Capital equipment, companies like Deere and Caterpillar had phenomenal earnings all throughout the past decade because they were selling so much equipment to China. And then, of course, I said luxury goods have been, you know, a real shining light in China in recent years. If you go to the next set of pictures, autos, not so much. Again, years ago, the U.S. car companies were all excited about China, but they've gone in joint ventures, which has been dictated to them, and most of them aren't making any money. So even though China is a huge market for buying cars, you've got many made in China, you've got all of the U.S. and European car companies there, not being terribly profitable. So they would have an impact if China slowed, but not as devastating to profits as you might think. And telecom's kind of the same way. You know, Apple is now in China, but they are not dominant in China. There's Chinese companies, and the Korean companies have had a better marketing package or price points, it seems. And then things that wouldn't be affected at all are here. Most consumer goods, technology, financial companies, healthcare, no impact at all if China slows down of any magnitude. Banks, by the way, had all tried to get into China. They bought into Chinese banks, and most of them have sold those by now because they just proved to be not very effective for them. So I'm going to stop here and say, to sort of tie this all together, our view is that China's growth clearly is going to slow. It's going to slow. The impact is going to vary. And overall, you know, we're in better shape than we've been in relative terms, actually, in a long time. It may not feel that way, but we are. And the question we all have to, we all have to be watching for, you know, what are the politicians saying, and then what are they actually doing? And the two may or may not be in sync. We have to watch that very carefully because while we talk about economic freedom and all these things, we have no illusions that anything would happen quickly or that it would be fast or true economic freedom. We can just see some liberalization of policies along the way. That could start to go a long way to creating a better balanced economy that would have more sort of stable growth as opposed to what people are worrying about now, which is the risk of more volatility. So I'm going to stop at that. I have some backup slides for any questions, but I also thought, I know for those of you who've been to China or had other issues, what questions does this raise, or thoughts, or rebuttals, or differences of opinion? Because I said there's a lot of opinion out there as opposed to answers at this stage of the game. So who wants to start with any questions? Yes.
I'm curious to know what they're doing to support their agrarian business, because they have 1.3 or 1.4 billion people. They have to feed their people. If everybody wants to move into the city, what about what happens out in the farmland? How are they making that more productive?
It's a huge question about the farm economy. They put some policies in place to try to equalize income, i.e. they could see that, after a while, you're right, people leave the farms, no one's working on the farms anymore. So they put some incentives in place to keep people there, and they raised the price at which they would purchase farm products, but it's not enough. And unfortunately, you've also read about the food problems they've had with tainted milk and tainted everything. So that has been a real problem, in that a lot of people won't even eat Chinese food anymore. There was a time when they were importing rice. So that's a very big issue, and one that needs attention. And again, we're hearing talk about it, about trying to have more incentives for farmers and more for FDA-like developments, but it's going to take time. So you're right, they're importing a lot more food than they used to.
What would be the economic impact of trying to start to get a hold and fix these problems, air, water, et cetera?
Yeah, so the environmental damage is heartbreaking, there's no question. And the government is talking the talk now, which is at least they're talking about it. And they're starting to talk about, again, incentives for municipalities to do things that are cleaner. We can't know what's going to happen. There are some people who are optimistic that because of these issues, China may actually have incentives to create more green technology than any other country. So again, but you're right. Right now, the cost is huge to clean it up, but it also could create jobs. And remember, since a lot of this stuff is government sponsored, that could actually happen faster than it might if it weren't government sponsored, right? So we don't know, but time will tell. Yes.
Yeah, I just have a question about when you talk about the agrarian aspects of China. Japan always has had a strong agrarian portion of their country, even with migration into the urban areas. China has not. They've moved people to the urban areas with the incentives of money and et cetera. I think that's one of the biggest problems China has, is their whole approach to the agrarian areas. I don't see the way that the central bank, central community, and the provincial leaders, whatever, it's got to change dramatically. And I just don't see it happening. I don't see how you haven't really talked about that within your presentation.
The agrarian issue is a very big one, you're right. I didn't talk about it because we don't have any idea how it's going to play out. The water is a huge problem, right? The desert is moving south, and that is a huge issue for China. So there too, whether they will take the lead in figuring out how to work on effective water usage is going to be a huge issue, because they've made a lot of bad mistakes to date. So I totally agree with you. So again, does this mean China becomes a total importer of food down the road? They've been buying up a lot of Africa, and that's one of these, and other parts of the world, because they're buying parts of the world that have water. So, this is why it's so important, and again, we just have to see what way the wind blows on this stuff.
Kathy, you haven't addressed the socioeconomic aspects. In a country like China, with the huge pressures and people moving from the countryside into urban, then there's going to be the opening up of the income gap. And the higher expectations, and expectations that it's going to be very difficult for a government to meet. And so the chances of socioeconomic pressure and unrest, all of which would affect this, if you could comment on that. And then there's the other aspect, which is China's political strategy, South China Sea, the fact that they have to import all their oil, the port that they're building in the southern part of Pakistan, and the oil has got to go through major choke points through the Straits of Singapore and past Indonesia. All these things, it seems to me, could have are difficult to predict, but they could have major impact on the economic picture that you've described.
Yes, The socioeconomic issues are massive, and I briefly alluded to the fact that the government knows that the populace is very aware of the gaps, more so than they were before. And no matter how much censorship they have, which is massive, God bless kids, they're able to hack into things pretty well, and there's a lot more information flow. So we constantly hear about things that the government thought it had been able to repress that are indeed floating around China. So the knowledge of the inequities, the knowledge of all these things is so much better than it used to be. So again, going back to what I said before about the government being, we think, smart enough to know that they can't have civil unrest. You know, they know what they have to work on, so that's why on their stated platforms, a lot of these things are addressed. The question is, though, what are they really going to do about it? And that's why we're highlighting what I think are a lot of the negatives here, as opposed to, we acknowledge this thing could blow up. We just can't have any crystal ball as to whether or not you get any kind of real civil unrest in China. The army in China, they have a huge military which mostly focuses on putting down civil unrest, and there are thousands of incidents a year that we never hear about. And that is what's terrifying, because it is happening all the time. There is blood in the streets. So we've got to believe that everybody knows you've got to have more income equality if you're going to make this work. So that's the optimist view. The negative would be it can't work, and we don't know. And as you said, there's all those other things are out there. All those other issues about their energy and everything else are huge issues. So the more U.S. companies, we talk to all the U.S. companies who are operating in China, and many of them are just getting out altogether because they're worn down to the bone. They're tired of corruption. They're tired of being lied to. They're tired of all sorts of things. Others are more optimistic. So that's why we're hearing a lot of different things from different companies who are operating there. And so that's why I'm saying to me that we don't know which way this is going to unfold. But you're citing all the significant risks that are massive. And again, for us in a world where there's open dialogue, it's hard to imagine how an economy can work when there's all these pockets of just brutal inequality. So we just have to keep watching. We don't have an answer here.
Why is the government seemingly so reluctant to abandon or modify the HOIQ system?
So the government. When you think about it, when you think of how much China has changed since 1978, and this is a country that has a long-term orientation. Those of you, I'm not a China scholar, but some of you may not know that in China they actually commemorate the 1842, 62, whatever, the Opium Wars. I mean, they actually commemorate that as the embarrassment of when China was humiliated by the British. So they carry grudges, but they're long-term in their thinking, and I would argue that they've made a lot of progress since 1978, and the liberalization they've put in place in some ways, probably to them feels like a big thing, but there's no intent to get away from single-party rule. And there's no intent to really make it a free economy. It's just the degree of liberalization that we hope they are considering. And that's what I keep saying, that we can't look at this with a Western lens, because they've never had in anyone's lifetime the kind of open, free democracy that we take of as normal, and therefore. Look, we're talking about relative liberalization as opposed to anything that to us seems more normal.
I was really referring specifically to what you alluded to earlier in terms of the difficulties that rural residents have in terms of assimilating.
Right.
I mean, it just seems to be natural.
Well, I think when you,
urbanization.
I said the rules that were in place about limiting the rights of people moving into cities made sense when people came and worked for a relatively short amount of time and went back. It was an incentive to make them go back because the next wave was coming in, right? And that's ending now, so that might make it more economically feasible to start creating benefits for people and have them stay in those locations. But that's a guess, right? Yes?
One of the things that
When I was there in 1989 with representatives from our country, we met with some of their leaders, and they talked about this issue of opening up the country to allow more of the farmers to have more freedom. And they were quite frank and said, we're talking about over 1 billion people. They basically were concerned about giving too much freedom too quickly, because they said every uprising they've had historically has been because the peasants had a lot of unrest. So they want things to develop, but they don't want it to become chaotic. So how do you decide what's the right balance in doing that when you're dealing with so many people? The other concern they have is with people coming into the cities and people in the countryside seeing the wealth in the cities. They were concerned about too many wanting to go into the cities. So one of the things they did, unlike what Russia did, was they allowed their farmers to have some of the land to grow things for themselves and sell in a free market environment. So they could make a little bit of an income, and it gave them a degree of freedom that they didn't have before, where everything was state controlled. So I think, to your point, we're looking at it with our eyes, but our population is so much less. We've grown up in a capitalistic society. These are people who have been under control for so long, and they don't know what it's like to have that freedom. It could be chaos.
And they're also, and we always forget too that most people live along the eastern, the eastern seaboard, and it's very crowded, and therefore the need for peace is important. I love the picture of the swimming pools you might have seen, where people are swimming like this, standing upright in the pool because there's so many people next to them. Yeah.
Why haven't you gone?
Great question. I just haven't had a business need to go because I haven't had a hands-on responsibility, and so for me it would just be a vacation opportunity.
You have the interest.
Yes, I do.
So why wouldn't you go there to explore and to see for yourself what's going on?
It's only because I haven't had time to take vacation in a long time. But I did go to Turkey, but I'd love to go. Yes, John.
Katya, I have reason to believe you've been in Hong Kong.
Yeah, but that's not China.
Oh.
I was in Hong Kong in business in 1984, as John remembers.
Okay.
Yes.
What about Chinese investment in the United States that we were hearing so much about for a long period of time? Is that stable? Are they not? Have they maintained? What's the status of that?
So before, the question was, what about Chinese investment in the U.S.? The main investment of China in the U.S. is still our treasury bills and our treasury bonds. Before 2008, there were a handful of attempts for Chinese companies to buy either whole or parts of U.S. companies, and they were basically disallowed by the U.S. government on security grounds or whatever. One was in energy, one was in some technology. So we were, before 2008, very adamant about not letting them in. And since then, we've been a little looser. There have not been any investments that were considered security problems. The biggest one that no one understands is AMC. AMC, the movie, the cinema group, is now wholly owned by a Chinese guy. And no one can figure that one out. Like, what made him want to buy a movie theater chain in the U.S.? There have been there have been some small partial investments, but they are nothing of size. So I'm sorry.
Smithfield.
Oh, Smithfield. I'm so sorry. I forgot about Smithfield. Smithfield was approved. And for those of you who followed Smithfield, we were indeed worried about, the Chinese taking over our pork supply. But that seemed to pass muster. And as you know, pork is the major meat in China, so that actually made a lot of sense.
Can you define pass muster?
Pardon me?
Can you define pass muster?
Well, it was approved by all the regulators in the U.S., so it's going to happen. Yeah. And here, one thing I know about China, like we have a strategic petroleum reserve in the U.S. in case we have a problem with oil. In China, they have a strategic pork reserve. because it is so important that they don't run out of pork, that they have these big sheds full of frozen pork in case of emergencies. So, so Smithfield Farms did make sense from a Chinese point of view, but there have been less than you would expect, but we would expect to see more, because it makes total sense from their perspective to start doing that. There's been some investments in Canada, and Canada has been a little more hospitable than the US was at first. Yes?
Well, with that savings rate of 30% or whatever it is, it's a tremendous amount of cash owned by the government, essentially, as trustee. And they can't afford just to go for treasuries. They have to invest that money worldwide to keep it safe. I mean, they do it either through financial instruments of the United States, emerging markets, and so forth. But this is nothing new, and I think it will be a bigger and bigger issue. Where is that money going? Irrespective whether it helps the Chinese.
Yeah, one thing about China, the wealthy Chinese have been moving money out for a long time. And wealthy Chinese have indeed invested all around the globe. You see real estate in London, New York, you name it. Chinese do tend to buy real estate when they can move out of China. But also people investing, there's the other thing in China we haven't talked about is the shadow banking system, which is a great worry because since interest rates have been so low, there's no motivation for people to just put money in banks, and therefore pools of money have been put together that aggregate about $1 trillion, and they invest almost unregulated, and they're basically taking short-term funds and investing in long-term projects, which means people can get hurt. So there's a lot of that sort of instability in China. Again, the government knows it's a problem, which is one of the reasons why letting interest rates become deregulated is a positive thing. So the financial side of things is wacky as well, there's no question. I guess the one thing that I don't think I have, just from the questions, the one thing I don't think I feel like I've properly conveyed is 5 years ago, everybody was worried that China was going to just a monolithic take over the world. And now, what I'm trying to say is I think people are realizing how many chinks in the armor there are. And that, to the contrary, there's risk that things, all these bad things could cause China to slow dramatically, which would have equally dicey effects for the rest of the world, right? So it's what we're trying to say is there's a shift in, I think, a more visceral understanding that China has a lot of issues to deal with. And if it gets them right, and it gets, if things grow moderately, and there's some modest liberalization, and it keeps people happy, and the economy starts to gradually liberalize, it could work relatively well. But if they get it wrong, they could really have a mess on their hands. Yes.
You're absolutely right. You can't look at this country through a Western lens. And anybody who wants to go to China and see what it's like, the Chamber's running a great trip there in March, and my husband and I were there this March, and we were actually there on the day the leadership changed. And so if you were looking at it through a Western lens, you would have said, oh, it's Washington during the World Bank meetings. I mean, the limousines were everywhere, people zipping around because of the new premier coming in. But when you talk to the tour guide, he said, wait a minute, we don't vote. I mean, this is happening. It looks like your country, but it's not your country. And the young people in the tourism profession who you would say would be anywhere in the U.S., they're very happy to have the job they have. They've risen to a point where, far exceeds what they ever thought would happen for their families. And so we do tend to look at it from our eyes as to, they're coming along like we are, but there's no will to, amongst that, new upcoming middle class to rock the boat and overthrow anything that's going on there. And you do see these, I think the reason you look at it through our lens is you see these cities that look like New York or San Francisco. And you say, oh, they want all the same things that we want, but it is different.
One thing that I was talking to some French who had were gearing up for tourism in the Loire Valley by Chinese tourists, not with any with the view that they have zero. Right, this sounds awful. I'm saying they know there's not a lot of historical visitations going on when people travel in Europe. They want luxury shopping and entertainment. So this guy was talking about putting in like a water park next to his chateau for, you know, that kind of thing. So it just, you know, I think that, yeah, it's just people are gearing up for a lot of different behaviors. Yes, Derek.
If I came to you tomorrow morning with $20 million and said, I have an interest in investing or putting this somewhere in the China area, as opposed to anywhere else in the world, would you recommend that I should actually sort of sit back and let things develop for a while, or would you have other recommendations?
I would have other recommendations. And the reason is there's not that, most things you can invest in China are indeed government controlled. So by definition, they are generally rather poorly run companies. They have much more of a survival motivation than a profit motivation. You know, because they aren't thinking like regular companies, they are thinking about what do I do to continue to build my power base and therefore get more from the government as opposed to profits for shareholders. So I have to say for investors who have a long-term orientation and are willing to see volatility, an interesting opportunity is what we all call now sort of the next 50, which is the countries that are probably going to benefit from China's higher wage costs, i.e. all the Kazakhstans, you know, Vietnam, Indonesia, all those countries that have not been as investable before, but are seeing more waves of Western companies locating there because their wage costs are lower. So Africa, you know, so for someone who really has a long-term perspective, some of the countries in Africa like Ghana and the Ivory Coast are actually quite interesting, but I really mean that about a long-term perspective as opposed to stability or growth in the near term, because these are illiquid markets and very thinly traded, but they are starting to benefit from the waning enthusiasm for China as being the only game in town when it comes to manufacturing or outsourcing or whatever. But if you really ask me, I would tell you to have a well-diversified portfolio.
Any other questions? Well, thank you. Things I forgot to mention in the beginning is obviously I stood up not because I'm married to her, but also because I lead the board at the Green Mountain Academy for Lifelong Learning, and she is helping us continue to raise the bar in our programming efforts, so thank you very much for doing that. I also want to thank GNAT, the TV organization, for filming this today. Now, when would we be able to let people know they might be able to see this?
Oh, in about a week.
About a week?
Yeah.
Okay, great. Thank you very much. So Kathy, thank you. If anybody else has any other questions, Kathy has agreed to stick around for a little while and answer those questions offline, so to speak, but we really do appreciate you coming and spending the evening with us tonight.
Thank you.